back. So, what we're going to look at today is annual statements and key figure analysis. Um, it's actually a far-fetched topic, but I just learned it recently and I thought I could share it with you guys and you can maybe learn a thing or two. And I think it's worth it, and I think you can pretty much show it off a thing or two to your friends or families, get that credits and praise. Yeah. So, annual statements. Um, Annual statements help us analyze the situation of a company. This helps us decide if we should invest or not. So what happens is like yearly, um, a company like gives out their annual report of their achievements and what they've been doing and all of the tons of informations. And there'll be always like a certain area where they're going to show the balance sheet. And on the balance sheet, with certain key figure analysis, you can determine if the company is on a good level or a bad level. Yeah. So the key figure analysis. I'm not going to go much on in depth how to calculate it. Probably look at how to calculate it, but fast, but not clearly, and how depth it's going to be. I don't know, but it's just going to be like like a short introduction. Maybe you can use it, maybe you can learn a thing. If not, just comment. I'll try to do my best. So yeah, um, there are there are as you see here there are 9 major figures. So the first one is asset intensity. Asset intensity tells you about the asset structure, like the structure of how the company's assets are made. It shows like what they've invested in and the intensity, how much they invested in relation to their total capital. Debt ratio is part of the capital structuring. It shows how the capital is structured. It's basically showing how much of their whole total capital they have debt. Equity ratio is just the opposite, how much they own of the total capital they have. Basically, how much it tells you information about their financing. The fourth important key figure is the liquidity. Liquidity degree two, we say, and that literally tells you their readiness to pay off the debts from tomorrow or today. So basically, if we look at these numbers, the best thing is if your liquidity rate is somewhere around 100%, like minimum 100%. It's great. The more higher it is, the better. But it's a minimum that you need 100%. You just have to imagine, like, if suddenly you have to pay off your debts, let's say your debts, let's say you have short-term money which you have on your bank account and some some debitors, then you need, and from that, the amount of money you have there, if you subtract, if you subtract from that the short-term debts you have, you should be able to pay off with your short-term assets. Exactly. So asset coverage basically tells you about um, how much the asset is covered. It shows like that your long-term investments must be able to you must be able to invest you must be able to finance your long-term investment. That's what it basically says. Um, the golden rule is basically that you need minimum ratio of 100%. And the next one is profitability of profitability of equity. So it's basically one of those most common words you heard, like return on investment, ROI. Basically shows that your equity must be higher than your total capital because the risk for person who owns the company, the owners, is bigger. Usually we just say that your ratio must be somewhere around, let's say, 8 to 12%, but it can depend from sector to sector and what you work in, or whatever your company is in. So the next one is profitability of total capital. It's an ROE again. What that just says is the opposite, just like, not opposite, but it's the same thing, another thing. What it says is like you need enough profitability of the total capital for the succession of your company. And usually the rate is somewhere around 6 to 10%. The next one is profit margin. It's one of the return on sales categories. So you need enough return on sales to have a base for the return on investments. These numbers vary strongly from sector to sector as well. Gross profit margin is basically the same thing. You basically see all of this on when I show you the account statement of a company. It's just a fast topic just to show you information. Yeah. If you guys need any help, or if you're interested to have more in-depth learning with a better class, like person to person, or like maybe your group of friends and person to person, you can email me and then we can arrange a Zoom class or something. Classes are totally free because when I teach you people, I learn something, and when you listen, you learn something. And it's better to have an interactive teaching than just watching a video. I didn't prepare much for this, it's just to awaken interest. Maybe you don't know, maybe there's some financial experts in between of you, I don't know. Anyways, goodbye, have a nice time.